Mary had a little loudspeaker. There we are. I can actually hear my echo again. So it's a bit of an echo for me. Let me just go back to the default setting. There we are. That's a bit better now. Thank you for that, my friend. Destroyer, Thigh Destroyer. Hopefully you can hear me now. 5 minutes later. Can you hear me now? 6 minutes in, sorry. I was saying basically we've got obviously Trump's bill got through Parliament, excuse me, got through the House, and hopefully you can hear me. He hasn't actually written anything else, so can you still hear me? Please let me know. I'd appreciate it. It sounds okay at my end again now. Oh, it did sound okay before, but it's definitely connected now, and the headset and everything is okay. Yes, we're good. Okay, right. Basically, I was saying, obviously, it's July the 4th. It's a holiday in the United States, major holiday, big long weekend. Trump will be signing his big, beautiful bill this afternoon in a lot of pomp and circumstance, no doubt, and a lot of gloating. Obviously, it's from the administration's point of view, it's cutting taxes, it's benefiting middle income, middle America, and going to generate lots of jobs and lots of investment in the United States. The criticism is it's benefiting the absolutely ultra well off, and there's no question about that. And it's adding a huge amount of debt to a country that's already massively indebted. So the debt burden on the US just will continue to rise, at least 3 trillion, possibly 4 trillion. Trump's saying the tariffs will pay for that, or not pay for that, but pay as a drawdown. He's even talked about no income tax, hasn't he, in his first 6 months in office? But the tariff deals that they're promised for today, the 4th of next week, the 9th of July. So there's still some time to run on that. I guess they did get the bill through by Independence Day. So they'll be singing from the rafters about that. But as far as trade deals that are in position, the Vietnam one yesterday obviously has a massive impact on China, because it's obviously this transshipment issue, i.e. China moving stuff to Vietnam and it's going via Vietnam to the US. So that was always a big question. But 20% for Vietnam. We've got these framework agreements with China, particularly about obviously the rare earth metals and the United Kingdom. But that's it. There's three of there's one in place and 2 framework agreements. So 3 if you're being generous. The other key countries like South Korea and Australia, Japan, obviously the EU, very much sticking points. Japan and India are supposed to be quite close. It's not happened yet, so we've got this weakening in the short term. Trade deals, by their very nature, and historically have taken months, years to get in place, more like years than months. Trump is trying to fast track everything. Obviously, he's in a rush. It's his final term. He's only got 4 years, and he's wanting to leave an impression on everyone. The Trump impression, Trump T2, Trumponomics. Will it work? Will history show whether it's beneficial or not? Lots of questions remain around that. His personal attacks on Jay Powell are quite undignified, but that's how he swings, isn't it? And the data yesterday from non-farm payrolls I sort of took the idea of a July cut off the table, and we're now back to still talking about possibly September and December, 225 basis point cut. But obviously the political pressure is going to build up, and we're talking about Trump, or he has talked about naming or interviewing people for the new head of the Fed, which comes into place in May next year. In September and October, and their name being common parlance. He's already said he's got 3 or 4 people in place, all of them yes men's a little bit harsh, but certainly will be looking to not get rates in the US as low as possible. And it's uncomfortable for the president to see rates at 4.5% when everybody else is are starting to cut the rooms. But it's slow as you go. The impact has not been seen yet of the tariffs, and obviously there's some big sticking points with China, the EU, big nations and trading blocks that the US has deficits with. So yeah, it's all still to play for. Apparently, there'll be some announcements about tariffs as well. Some letters being sent out over the weekend, today and over the weekend, from the president to countries. Some tariffs are being talked about as high as 70%. So again, the devil is always in the detail. They're great with rhetoric, this current administration, but certainly, his players, his secretaries, his trade secretary is are very much online. Lutnick and Bessent are very much online. Bessent very much the grown-up and cool guy in the room. Lutnick a bit more of a entrepreneurial cavalier, a bit like out of Trump's mold. But certainly, they're shaking things up. So let's see what happens as we run through the normally quieter months for summer. Anyway, back to a bit of technical analysis. So Bitcoin remains bid. We've got this support, as I was saying when the microphone was off, around this 106,000, 105,000 channel through here. We had a good day Tuesday, not so good day yesterday, but it was still positive. We were in a smidge of the all-time high at 111,000. We're down today as lots of assets have been pared down, but we're still very much bid, and hold of the 105,000 in particular is positive for Bitcoin. A breach of that, and like we rallied from 100,000 quite quickly and rallied into it last time, we could move down quite quickly into 100,000. Then below that is that 92, 96,000 channel we talked about earlier in the year. So Bitcoin remains bid to the upside. If you've got another crypto you want me to analyze, just let me know and we'll do that on a more regular basis for everyone. So let's go through this in order. Actually, let's bring in the I brought the calendar in. Let's bring in the calendar today. There's been some obviously news in Europe with markets in full. I mean, it's summertime, or starting summertime. It's Friday, but the markets are obviously clearly open. Have been open in Asia. But if I just bring in the calendar for today, not a lot going on. We had a speech earlier. We got a speech later tonight from Miss Lagarde. There won't be any surprises in that. Obviously, all the data's in. I said this is the big surprise yesterday. This 147,000 and a collapse, not a collapse, but a big fall, a big surprise fall in unemployment. Sort of Goldilocks, you would argue, numbers. But when we drilled into the detail, there was still some significant issues with manufacturing. A lot of this gain was government jobs, and that's to do with the end of the a lot of it's to do with the end of the school year, the end of the university year. So there's some education contracts being applied. So there's definite signs of a cooling in employment, not a cracking. It's a definite cooling, because we saw this bounce back in unemployment claims, but the long-term unemployment is claimants have started to tick back up. Earnings have started to tick down again. So we got 4.2 of 1% for the monthly compared to 0.4 the previous month. So it's quite it's a halving of earnings growth. So this idea about migration, both immigrants being deported and people being put off about trying to move into the US, is having a direct impact on certain sectors of the economy. Obviously, these are official government earnings. So if you're undocumented, or you're seeking asylum, or whatever it is in the United States, you're working cash hand to hand, you're not necessarily going to get reported by your employer as being employed. So there's all that sort of mish that goes on, and that could explain why the private payrolls were so negative on Wednesday when we got them. Remember, there was actual decline in the private payroll, so they might be capturing more of that sector than the official government statistics that go into the non-farm payroll collection by the Bureau of Labour Statistics. So there's a lot of technicals in things there again, but the divergence between the ADP and non-farm payroll continues, and it's been as wide as I've ever seen it, to be honest. From a contraction in the private sector to a big beat for the official data. But as I say, the detail was, as we saw yesterday. Let me just bring our calendar up. Was in the government sector in particular. So I just bring our calendar. yesterday. And we saw that sort of bit of a rally for the dollar, which soon was faded out. So Thursday it was, wasn't it? So you can see these, as we pointed out yesterday's webinar, you know, earnings annualized sleep, and it slipped on the month again. The average hour working, that again, it's only down 0.1 of an hour, but it's, you know, it's negative, it's gone backwards. So again, that's suggesting, you know, a bit more weakness in the economy. But obviously the headline number was a big beat. But you see these negative numbers here for manufacturing. Remember, the symbolism of manufacturing for Trump and his administration is significant. So that was a negative, it's worse than expected. Previous month has been grounded up, but the payrolls here, 147 themselves, the non-farm ones, the private non-farm ones, 100 was 74 compared to 100,000 was expected, and last month was also ground down. So there's that sector of the economy, it's all being quite negative, and hence the Dubs continue to say, you know, wait, and that's obviously what we had the follow through on the expectations for the a rate cut this month have disappeared. But obviously, you know, I guess even in today's announcement, there'll be some reference to the interest rate, and Jay Powell again from the president about interest rates in the US being too high. But certainly, if you're in work and you're earning a good salary, you've got good earnings, you've got good bonuses, this is a, you know, a bill for you. And the more you earn, the more you've earned or can generate, whether it's from working or from investments or you know, endowments or whatever it is else, you know, it's certainly an administration for you, and you could come out of this quite healthily over the next couple of years. But because all those tax changes they talked about in 2017 and now in getting written into law and permanent changes. Anyway, let's go back to the chart. So Bitcoin remains bid. Oil obviously this week has been all over the place. Well, last week obviously, and we've sort of consolidated this week through that 66, 67 handle. We had a sprout up on Wednesday through the 68 handle. And we went as high as a test $70 level at one time on Wednesday. We're down again today as markets react. Obviously, it's lower volume, and this is simply a derivative market from very few market makers in the market at the moment on a Friday afternoon in Europe. So back under $69. Again, sort of sideways action, a significant break, which this looked like on Wednesday coming into play. It's also, but it's given it all back. Well, not all of it back. It's given some of it back today. So see where we finish. A close for me above this worry down here over $68 will remain positive for the US oil market, and that looks like what may be happening. So that's remain relatively positive, and the lift we had on Wednesday might follow through next week to the upside. But to get, obviously there's all sorts of geopolitical things could get in the way of that. This weekend actually is also the other reason. If I go forward, you can see here tomorrow the OPEC meetings start tomorrow as well. I think they're actually physically in Vienna now rather than they used to. They're online. It says they do hold them every 2 months. You see here bi-monthly. It's the summit meeting. Are they in Vienna? Oh, I'm not sure where they are. Sometimes Paris, Vienna. It had been online for a long time. So again, oil sideways ahead of the OPEC meetings and the OPEC Plus meetings tomorrow. So that's oil down on the energies front. I'll come back across this because we're playing with them at the moment. Somebody just sent me a message. It's okay, it's nothing particular. Okay, so just go back to the how we've done this week and where we're going with the major crosses. So let's just do these in order. Aussie dollar 65.50. 65 is a key level for the Aussie dollar. We've held it here. We've held it now for the best part of 2 weeks. We first broke through here on the 25th of June, and it's now 1, 2, 3, 4, 5, 6, 7, 8 days above the key .65 level. We're holding. We've got a bit of a rounding top, which is never great here. this rolling over. So down day today. Dollars come back yesterday a bit on the payrolls data. My light just gone off. Lights seems to have got a bit darker. And we're down again today, but we are holding 60.6550 currently. The major support is down here at 65.20, where the 21-day moving average is 65, and then the 50-day sits all the way down here at 64.70. So Aussie dollar remains bid to the upside. That's a rounding sort of top, so watch for maybe some more weakness next week. However, you can see these wicks all come into this this level here at 65.45. So that's the next support level here. You can see where these wicks are. So 65 all the way down here. So might be some weakness start of next week with a rollover on the Thursday and a Friday. But again, let's see where the candle closes tonight. On my actual interesting, I just checked my trading system before I came on here live, and the main system has nothing that looks like it may be triggering tonight. There's no potential trades. The more aggressive system has two, the Euro Oz again, and the pound yen. We'll come back to those later, but that's all. So not some Fridays can be quite inclusive, but at the moment we've got pound yen and Euro Oz on the fast aggressive system. The more traditional, more traditional conservative end of day system doesn't have anything looking like it's triggering, although we've had still very positive for the week. So anyway, that's the Aussie. Dollar CAD significantly under 137, and we've been under 136 as well this week. Wednesday was the break of the 136 level. We pivoted lower yesterday, didn't want to move any lower by the looks of things, and we're back up again today. So I'll say the dollar's having a better day today, even though the US is closed. So read into that what you will. This remains in a downtrend. The 20-day moving average sits there at 136.68. So again, going into next week, I would be looking for that low from the 16th of June at 135.40, this one here. And if we can, on a more positive note, if we can hold over 136, that would be more positive for the dollar, but we need to break over these key trend lines as we move up, and that's still moving lower. So I'd expect a test of the low 135.40, to be honest, ahead of a test of the 20-day moving average. But as I say, anything can happen, and don't prejudge it. We don't know, guys. Remember, every time we take a trade, a buy, a sell, whatever we're doing, we have no idea what's going to happen in this zone here. And this is where we make our money. This is where we make our livelihoods. This is where this side of the chart, this white area here, the right-hand side of the chart, as I'm looking at, left-hand side is right-hand side as you're looking at as well, is where we make or lose our our trading accounts. But so you takes your money, you pays your money, you takes your choice, and so dollar remains under pressure. Swissy, our best performer, 78.30 today, off the low we saw earlier in the week at 78.71. So we're back to 79.50, I should say. Sorry, I misread that. 79.50 from the low of 78.60, and that's sort of moved up quite significantly into its first resistance area at the 5-day moving average there yesterday, and we've gone back down off that today. So it still doesn't look great for the dollar, does it? And again, another one, the break to the upside is back over this hugely psychological .80, and it's also over .8050, the next 0 and 5 numbers. So dollar remains weak, and the trend remains to the downside. How much lower can it go? Well, it just keeps, don't try and push a target down. It's gone down. It's bouncing at the moment. We could tonight I'll probably be putting a little trend line up there, seeing if that, it's a shallower one than we had the last retrace we had here back at the middle of June here, for the second week of July. So, but the momentum is still to the downside unless something changes significantly. Some significant changes in policy from either the Fed or the Swiss National Bank. It doesn't look like that's happening. Yesterday's, as I say, yesterday's non-farm payroll took the chance of a July cut off the table completely as far as the market's concerned. So dollar's still was under pressure today, having bounced up a wee bit yesterday. So that's Swissy. The yen under 145 again. A good day yesterday. The bounce on the payrolls data and the chance of rate cuts disappearing this month, but then big fat round number being a big fat resistance area, and we've stalled again. So again, yen, it's not really doing much at all. We've got these flat moving averages. We've got the 50 and the 20 sort of undulating around this, or under, I should say, this 145. They're sort of undulating through 144. So again, bias remains very much to the downside, perhaps less so than some of the other currencies. But again, watching what the Bank of Japan and the government in Japan may be announcing over the next few days. There was some sort of more hawkish talk this week from one member of the rate setting committee in Japan, saying they this is temporary, this stall in raising interest rates, but it's been going for ages now. So the strength of the yen has cooled somewhat, and we've been a bit directionless here, certainly against the much weaker dollar against the other major currencies, but the yen's not fared too well either. When it comes to the Antipodeans, we've been all over the place, haven't we? But as we saw with the Aussie, the Kiwi is at .6060, so the strong rally remains intact, but a bit like the Aussie, we've rolled over this week somewhat, all the way to 61. And again, I think even, I don't think this chart goes back far enough to see when there we are. Yes, it does. We were last at 61 all the way back here in October last year for the Kiwi. So a big, strong rally this first 2 quarters of 2025 for the Kiwi dollar against the weakening US dollar. And here you see on the weekly chart, last week we had that key cross of the 20 period moving average crossing above the 50 period moving average, which is typically a bullish cross, as we've seen here, the negative cross here back in October 24, we went all the way down to this 55 zone. So will we see some follow through on this? Quite possibly. So 61 we've rejected on our first attempt, but as you can see here nicely on the weekly chart, you can see the previous rejections were here the last 4 or 5 weeks, and we've gone higher again this week. So the zone remains to the upside. Okay, let me just actually quickly look through the weekly charts for the other majors as well. Let's go back to the Aussie. You can see the trend is very similar there. We're at these multi-year highs, and that new weekly high this week took us to that 66.60, an area we didn't see again back to until November 2024. So strong Aussie. Canadian similar on the weekly chart. That test low here in June, this 135 40 area was an area we haven't seen again since September 2024. So nearly 9-10 month low for dollar CAD, and that again as a weekly chart remains very weak, as you might expect. The Swissy was literally off the charts there. This is a 3 and a bit year low here for the Swissy. The yen on its weekly parameters there, you see that lack of coherence. It looked like the dollar was coming back a couple of weeks ago. We had a turn down from the 20 period moving average last week, and then we're moving back down again this week here on the weekly chart. So again, these lows at the 142 level are the targets to the downside. There's the 142 here, purple line. We need to break and hold significantly over 145, which we didn't following the first break 2 weeks ago. So 145 very much in play. Next week, Kiwi, as we started with, was 60.64 and these new highs. The euro here we'll start with the weekly chart. You see, it's no looking back. Is we are, could argue here on the weekly chart over extended. The RSI is at 74.09, 74.09 on the weekly chart. So we're into overbought area, and that hasn't happened since this chart started, since 2020. So that will be raising some hackles elsewhere, but we've been like that for the last couple of weeks, and we had a very strong week last week as well, as we continue to move higher. As far as technical analysis of what you can see here on the chart, here on the weekly chart, that still remains nicely set. the K and the D line. Sorry, the signal line and the MACD line on the MACD is nicely still angled, moving up. Bit of a stretch. The gap between them has got overstretched here. It's come back a bit. Still comfortable, as I say. The RSI, the 14-period RSI, the 14-week RSI. Remember that this is into its overbought area for the first time. So there may be, shorts around the 118 level. It's a bit of a struggle perhaps to get to 120, as I wrote a couple of weekends ago. But we are we're big bid last week and continue to move up this week. And obviously, you can see there the body of the candle is much smaller. We have struggled at 118, but we're still on the upside. So just watch that next week. How we play 118 next week. But you can see here there's a flattening out of the MACD histogram, but again remains quite well bid. And here, if we look at the ATR, there's lots of volume here. 200 odd, 2,000 odd pips were moving on a weekly basis in the euro. So certainly keep your eyes peeled on that. We are bid to the upside. Sterling very similar, although this week we've cooled off. Obviously, there's lots of political surprise factors this week with the Chancellor Rachel Reeves crying in Prime Minister's Question Time in London yesterday, day before yesterday on Wednesday. Markets got spooked, treasuries got hit again, sterling got hit, but we've bounced back since then. That's still deemed a relatively safe pair of hands, but lots of issues for the new Labour government, which celebrates, I think it's tomorrow, the 5th of July, I think it was last year, a year in government. Lots of achievements on the social front, lots of strikes have been put to bed, pay deals agreed, growth coming back in, although it's very glacial in the UK. So there's lots of positive news for Starmer and his crew to get out there, but it's they're fighting the they're fighting the very anti press corps here in the UK. Being the lawyer, this human rights lawyer he is, that comes in for a lot of pressure and a lot of stick as well. And then some of the mismanagement and the miscommunication of some of their policies from traditional left-wing voters as not being great either. Some of the pensioners, some of the disability issues, and this big change this week is causing it. And obviously, his couple of U-turns is going to cost. It needs to be funded. So how much of a buffer Rachel Reeves is going to have when it comes to the autumn budget, we shall see. But it looks like tax rises are on the card. So and changes. There was some gossip this morning in the FT about possible changes to pension contributions from businesses as well. Come the budget, which looks quite possible or likely, but taxing higher rate earners on not only income but on assets maybe on the cards as well, which many traditional Labour voters sort of said should have happened before now. Anyway, as far as sterling's concerned, it's rallied very significantly, and that's more as to do with the strength of the sterling as the weakness of the dollar, again, as it is with all these these crosses we've seen. But the big break last week of 135 has been significant, and then also last week we went through 136, having tested it for the three or four previous weeks before that. So we remain bid. The high this week has taken us to 137.88, and obviously that then brings in 138, and then the inevitable 140, and then 142. If we look at this weekly chart up here, it's obviously not out of the bounds of this strong trend that's still in place. And again, we're flirting with overbought area here on the weekly chart for sterling, but it's a suggestion that may to have to come back down now. But at the moment, that strong week last week has been not really sold off this week. So we remain bid on cable on the weekly time frame. And if we just go back to the daily for next week, we can see again a bit of a rolling top. A bit of a rolling top this week. There's that 130, 137, 138, 138. Yeah, 138 test we had on Tuesday to start the new month. But again, another one where the 20-day moving averages provide support significantly. So significantly, again, use that one twice once since then. 136 is where the 20-day moving average is now sitting. So a key area. So break of that next week, and we come very quickly back to 135 and the 50-day moving average. This holds, we can easily test the highs of this week above 137.50. Is what you'd want to be looking for on your higher time frames for cable next week, my friends. Indexes, we had all-time highs yesterday for the Dow and the in fact all of them. They were up into close yesterday. Let's start with the S&P, it's the most important. I'll start with the Dow, it's the top of the shop there. 0.77% up yesterday. The derivative market here, this one that is I think it's still open, is down today, but again, another strong week. If we look at the weekly chart, we'll do that for all of them as it's a wrap up of the week. Big week last week, positive week this week, new all-time highs, and away we go. The week after next, not next week, the week after next, we see the second quarter earnings season start to kick in. JP Morgan, the first of the big companies to kick off, along with Alcoa, but first of the big banks, JP Morgan, Wall Street's biggest bank. And also, obviously, the 9th is the following week as well, with regard the deadline for tariffs, countries to offer the US a tariff position. See if that gets pushed out again, or how many more countries actually get through to that for next week. And then obviously we have CPI data as well. So plenty of issues out there still. Is this weakness in inflation? Is it going to continue? Is it, don't like to use the transitory word, has the impact of tariffs not really got fed through? Has it been absorbed by some importers and passed on to the consumer who's still putting his money in his pocket? We shall see. But as far as the stock market trading is concerned, the Dow remains bid. The Nasdaq, the home of the tech stocks, the big stocks that have been driving this rally for the last 13 years, I think it is. New all-time high here again, 27.40, and this is one that's actually positive today, following a big gain for the wider Nasdaq yesterday. The Nasdaq was up over 1% again yesterday. Big candle there, another 1% gain for the Nasdaq this week. Sorry, that was the week. This is last week's candle. Sorry, it's not the daily one. There you can see the weekly. There we are. These are all-time highs, and the daily yesterday, that was a new all-time high, closing high yesterday. As you can see here, a 1% gain yesterday, but we're down a tad today. And finally, the S&P 500, the cash market closed at 6,270. Our derivative market here is down at the moment, trading at 6,243. Is still open. It's still price is still being made, but obviously, and there's nobody around, so be careful if you're trying to trade these markets, guys. Saying it's open up. Yes, I think it's still open until 7, isn't it? Yeah, 5:30 my time. So again, a strong week. A strong week last week. We'll go back to the weekly for the S&P 500 as well. So again, there's no reason to be selling this. We're over the key 6,000, 6,100, and now 6,200 in the last couple of weeks. So 6,200. Can we hold it? I say we've been oscillating through it this week. Here we ran to it, bounced, couldn't break it, broke it, and then obviously this is the derivative market. We can see sort of coasting through it. I'd like to see a bigger body candle on the break, but it remains positive, and those earnings are just around the corner for Q2, which should be okay. The other big thing that we don't trade here or offer you is obviously the treasury market. And Treasury's the 10-year yield closed at 434.80. The reason it's important is Bessent, Scott Bessent, the Treasury Secretary, is very much focused on the 10-year being under the 4% level. So it's it's drifted over. It's still significantly over the key 4% level as we go into the summer term, basically into January. So. There we go. That's the stocks And finally, gold. It's really still over 3,300, but really run out of direction, to be honest, my friends. It's I think we had a gold trade this week, didn't we? I think we were in the money, and then that's right. The first half was closed, the second half turned back to our stop loss. So had a good 3-day bounce here earlier in the week. We down yesterday and we're bouncing today. So the 3,000 level remains obviously 3,300, I should say, remains key next week going forward. At the low this week on an intraday basis took us all the way down to 3,245. Excuse me, the phones are ringing. Let me just get rid of that. 3252 was the support area this week. So watch that next week. Can we hold 3,003? And it probably looks like it. But yeah, there's a significant lack of direction here on gold last week or so. So let me just click. So what was that? So yeah, I can't really get excited about the gold market at the moment, to be honest. We're sort of really stuck here, so I need a clear direction as a trend follower. But it looks like it may have rolled over. But if we look at the weekly chart, it will remain still very much bid. Although we were down last week and the week before, we've bounced up this week through the 3,300 level. So you can see how that's a key pivot area. It was a struggle to get there. We pivoted through it, moved higher, and that attempt at 3,500 was rejected. We got as far as 3, 4, 500, and then we've come back down. So yeah, gold consolidating at highs, always relatively positive, and obviously the risk is still there. If we see this massive, we see the the problem of inflation coming back, it will get a bid. More geopolitical issues will get a bid, but certainly gold is one to hold, and many holders. We've had this massive collection and build up by central governments and central banks over this first half of 2025. What a rally it's had. Yeah, it's still well bid to the upside. Okay, so let me just finish with our open trades at the moment. We are still long at the moment. The FTSE it's up today. Obviously, that's the week. We got the hourly chart. You can see, well, there's our. We were down a bit this morning. We're back up. Again, I might close this out at close. We were in here whenever it was on the 30th. Within a smidge of being stopped out here the following day, but we sort of looped up here on the 4. Well, I shouldn't really use the 1 hour. It's an end of day trade, and I use the 4 hour time. But you see the lows have got higher, the highs are getting higher still. So I'm still in this. See if we can actually end up getting to this target. So see what we look like later on in the day, whether we'll close it out for the weekend. Quite possibly. We'll see what it looks like. And the only other positions we've still got open are all CAD crosses actually. So let me just put in CAD. So I'll just minimize searching this. Aussie CAD. Last time I looked, was in the money. It's not. It's out. Oh yes, it's in the money. This is a short from last night. That's in the money at the moment. CAD yen, that was out of the money. Yeah, there was a mixed message here. I was short Aussie CAD and long CAD yen, so they're both going in the same direction. And that one is also out of them. This one's out of the money. We got filled here, so we were trying to take it back to the target up here. So we were long CAD yen, but short Aussie CAD. So that one's in the money, one's out of the money, and the other one we are short Kiwi CAD is the other one, and is that one in the money? It's not doing anything at all. There we are. Just rummaging through the entry from last night here at 82, whatever it was, 80. I can't remember the actual number, 82 something or other. So again, that's a bit not doing very much. So again, that might get close out Friday. And I say the FTSE is in business. So we got 1, 2, 3, 4 open positions at the moment late on Friday. Again, they all might get closed out, they all might not, but I will update you on our Discord group. And as I say, my trading platform for the end of day, which obviously isn't yet, but the only potential trades at the moment are on the Euro Oz, which is interesting. We've had 2 losers this week on the Euro Oz. That is looking to go long again. So we were long on the 27th, which didn't work. We were short last night, which did I take? Yeah, a token got stopped out, I think, didn't we? And now we are potentially long tonight. Stops about 70 pips away. Target is 1803. We'll see. It's top of the channel actually. It's had a good day. So if I'd kept that long open from the 27th and not dragged the stop loss up, we'd have perhaps still been. Oh, anyway, such is life. So Euro, sorry, I'm looking at the chart that you can't see. So Euro Oz is the one that's been messed. As we've had 2 losers on this week. Euro Oz, we were long and then short. Oh, we were long. Yeah, we were long. Sorry, we were long the 20th, which worked out. We were long the 27th, which hasn't worked out. And we were short last night, which also hasn't worked out. It's been stopped out. See the 27th is still on there. So we've hit the 27th target, even though we got stopped out because I dragged the stop loss up there. But anyway, this is looking to go long tonight. Having had 2 losers, perhaps the third one will be a winner. We'll see. We'll see if we take that tonight. But watch that, because there's not, as I say, there's not a lot going on. And the other potential one is another one of my favourite traders is the Guppy pound. Yen long at the moment. The stop loss looks a bit tight, that's all. But again, I'll update you later on tonight. Oh, my other phone's ringing. Excuse me. Somebody from Holland that I don't know, so they can go away, can't they? So there we go. That's Wednesday. Sorry, that's the first week of July wrapped up. It's the 4th of July. Obviously, it's Independence Day. So have a great weekend, everyone. As I say, next week. So a quick eyeball for next week. Let me just actually let me use the other calendar. It's easier, the Forex calendar. So easy for you to renew. But so next week we've got both the Antipodean central banks with their rate announcements. The Australians go first. The RBA expected to cut rates by 25 basis points to 360. So this comes down again to the irk of Mr. Trump. So the US seems even more of an outlier. And having gone last time, the RBNZ will are more likely to remain strum and unchanged. We've got Chinese inflation data for earlier on Wednesday as well. Thursday, the key unemployment claims, but the event of the week next week, or it could be, it won't be, is the Fed minutes at 7 o'clock my time, 1800 hours GMT, next Wednesday, the 9th, following the RBNZ announcement earlier in the morning. And Friday, we got Canadian jobs because they didn't come out this Friday, and UK GDP, the monthly number. So relatively quiet week next week. Probably no surprises from either the RBNZ or the RBA. It'll be a surprise if the RBA don't move their rates. That'll be the biggest surprise. And having gone last time, if we just look at the RBNZ, it's they've continued to move down. They're sort of likely to stall here, whereas the Aussies haven't picked up. They did and then they didn't, so they're still relatively high. So the Aussies are going to move. RBNZ perhaps not to the downside. So there we go. That's another phone going off. The doctors are messaging me. Oh, it's not a negative side. So that's next week. So quieter. On Monday, I'm doing another webinar on trading. So join me on Monday evening. I'll be live for all the key data next week. That was this week, wasn't it? Chair Powell speaks. So obviously join me for Tuesday as well. I won't be around for the Aussie announcement, but we'll do a wrap up on Tuesday. Same with the RBNZ. I'm still asleep when that goes up, but we will be live for the minutes from the FOMC, and then unemployment claims on Thursday, and a wrap up again next next Friday when we're into the second week of July, and things start to slow down. Then looking forward to the following week. Let's just do this while we're here. When the key data the following week is it's inflation week, and obviously the US is here on it's on Tuesday, isn't it? Yeah, there we are. Tuesday the 15th. That's the next key date to look forward to. My niece goes to a graduation ceremony on Tuesday the 15th as well. So I'll be around for that as well. So anyway, take care, my friends. Trade carefully. If you haven't got an account with us, as I say every day, why not? It's the best way, the easiest way to get yourself into the trading game. It's a very cheap way to get yourself some significant equity on us, basically. So if you want to start with a smallest account is $5,000. It costs you less than $60. $55 gets you a standard account, express account, i.e. the one step is still only $55, but the targets are a bit tighter and higher, but you've only got one step before you get to the funded stage. Get to the funded account stage, obviously do your KYC, and you can any profits you're making on a funded account, 80% of those profits are yours in real dollar terms, and obviously you get the refund of your account. If you're brand new to us, you haven't used us before, new 25 gets you a 25% discount on any of the tariffs. So that $55 for a $5,000 account, if that's all you've got in the world, is less than less than $42 now. If you've got a bit more and you want a bit more equity, our most popular approach is the $25,000 account, and then you can have that for less than $132 from the standard $175. And remember, if you can prove yourself as a good trader, you get that fee back anyway, and then you get to some real cash paid out, as we've done today. If you go onto our Discord blog, real cash paid out to real traders in real dollar terms into your crypto wallets, and away you go. Bob's your uncle, as we say in England. So anyway, I've talked too long as usual, nearly an hour today, even though I'm all on my own. But anyway, take care. Watch those pips, and may they always be on your side. Take care, everyone. We'll see you on Monday. Have a great weekend. All the best. Bye-bye.